Hey guys, this is Michael Update. In this video, we're going to look at some on-chain data and some macro data. On-chain, because this regime that we've had for the last few months may be shifting a little bit, and if it does, then prices may go as well. Macro data, really for the longer term on why Bitcoin, why this trade. So as you can see here for the Bitcoin price, look, it's just sideways again. We've been in this range for what seems like forever. It's been 25 weeks of we hit that high, and then it's just been this down, sideways kind of distribution type move. But we're still in this range, right? So this 70, 50 here, just in the middle of it, kind of had some bounces here. This downtrend, which it is a downtrend, you can definitely see that. However, like I've said before, if you're in a bull market and if you're in an uptrend, over the higher time frames, and I believe we are, this could work out as a bull flag, which is where you just get this distribution a lot, and then suddenly something changes and you actually start to kind of test this high here, and then if you do break through, that obviously goes to a new high. That could happen if we are still in the bull market, which I believe. But if you're just looking at prices here, it's just sideways, right? Still sideways, still waiting for some larger shift in central bank policy, which I think may happen towards the election and after the election. I think that's it. I think the market's just trying to work out what's going to happen with that, because two very different economic policies from that. And so that is going to affect markets and certainly Bitcoin. If you do trade crypto though, Bybit deposit bonus down below up to $30,000. If you click that link, make a deposit, trade, and get that deposit bonus. Let's look at some on-chain data though, because it shows that the fairly soft regime that we've been in over the summer may be starting to change a little bit. So up here in March, you had that big price rise. We hit the all-time high. Mostly it was large wallets actually accumulating this. Now this makes sense because the everyday investor for BTC is dollar cost averaging, just getting in. And the only way that anyone else buys the Bitcoin that they have bought is by coming in and forcing the price up. You have to incentivize them to sell. There is no Bitcoin, and there's a tiny amount that is mined, and we get that. But the vast majority of Bitcoin, if you want to buy it, you have to buy it from someone else. And that means you're going to have to pump the price and incentivize them to let that go. And if these large institutions are coming in, pushing the price up like this, we know this is the ETFs and other large institutions, they're going to have to force the price up if they want it. They've been nowhere to be seen in the summer. If they're coming back now, and if they're buyers, which I believe they are because of the macro situation, which I'll talk about later, but you've now got these large banks as well able to sell the Bitcoin ETFs, which means potentially a lot more activity there. And if they want to buy from someone else, they will have to force the price higher, because in this price rise here, yes, they got a lot of Bitcoin, but those people, those sellers that sold here no longer have that amount of Bitcoin. So we've basically gone up to an all-time high, come off 20, 30%. But if they come back and they want to keep buying, you would suggest that the price would have to follow if they want to incentivize holders to actually sell. That is a bull market for BTC, right? Total supply held by long-term holders. You can see there was a distribution here. Again, long-term holders will be dollar cost averagers. It will be us, right? It will be people that have been in Bitcoin a while, because those institutions haven't been. We've been in longer than them. If they want our BTC, they have to bid the price up to incentivize us to sell. So that was a distribution from long-term holders, which is retail investors, right? But we've been accumulating again. Why? Because the institutions haven't been here in the summer. So that red is us, everyday investors, dollar cost averaging small amounts. If they come back, we will distribute again, right? Because they will force the price higher. If they want the Bitcoin, if the institutions want the Bitcoin, they need to pump the price up to actually incentivize long-term investors, which is essentially dollar cost averagers. And again here, just for the longer cycle, right? 4-year cycle, absolute peak of a bull market in 2018. You can very clearly see that the hodl waves coming down to a big low here. And then again, at the top of the previous cycle, a big low, nowhere near that, right? So yes, there has been some selling, some incentivization to sell, but this is not the top. This is not what the on-chain looks like at the top of a bull market. So if the macro plays bull and a lot of institutions want to come in, then there is a second leg here for the bull market, in my opinion, right? All the on-chain data is showing that. And so that's what I'm looking for as well. I don't think the bull market's over. I'm looking for a second leg, maybe later this year or at some point in 2025. Next, I want to come onto the macro side of things, a slightly longer term look here. Why BTC? Why this trade? We know we can't be in the fiat currency, but why? Why can't we be in the fiat currency? Why do we have to find something else? Bitcoin for the next decade has outperformance, probably for the next 20 years, to be honest. Why Bitcoin? It's because governments are insolvent And the only way that you can pay back previous debt is by expanding the bubble and making the money that you took out before appear cheaper in today's terms. It cannot be paid off. The fiat system is an expanding balloon, and if you want to deflate it, it pops. No one wants it to pop, so we're going to keep expanding it little bit by little bit. You can't deflate it, you can only pop it. No one wants it to pop because everything goes to zero. So we keep expanding it, which means on the flip side, because let's look at the positive side of this, we can invest in solutions like Bitcoin and stock indices that help us defend from what's happening. So there's a positive side. We have the solutions to benefit ourselves. In Q2 2024, annualized government expenditures were about 10 trillion, representing 35.2% of GDP. Over the last 5 years, government spending averaged 37.6% of GDP. That was up from around 27.5% in the 1960s. The government is bigger. They're taking much higher percentages of the economy and GDP figures. If you've watched my videos previously, you know that I think GDP is a completely fake metric. It means nothing. It doesn't mean how much wealth there is in an economy. GDP per capita doesn't mean anything. It doesn't mean the amount of wealth. It's not wealth creation. GDP is a fake, made-up metric that measures an expanding balloon in the fiat system, but it does not measure wealth. GDP is completely and totally controlled by the government. They now make up 35% plus of GDP, right? So we don't ever trade this. When you look at stocks, you're always looking at some quarterly report and sales are up 1% and the stock's up a bit, but 35% of GDP is the government. I want to trade against them because they're insolvent and they're not going to pay it off. They're going to expand the balloon. You can see right here that because inflation has fallen too far over the last few years, it was at 10% and now it's 2.5%, 3%. They tell us from the central bank, we want to make sure that inflation is 2%. Why? Why is inflation 2%? Why not 10%? Why not 15%? It's an arbitrary number. Why is there inflation at all? The natural free market disinflates prices over time, not inflates them. So what you're saying is you're insolvent as a government and you want to steal our money a few percent a year and you're going to control the economy and control the spigots of spending to make sure that you're stealing some money over the long term, inflating prices to make sure that the debt that you've taken out previously gets cheaper in today's terms. You can see right here, there is a huge, huge deficit. No one is going to balance the budget. No one on the left or the right. There's an election coming up. No one has said one single time that they're going to balance the budget, that they're going to cut spending, that they're going to cut entitlements. It won't happen. It doesn't matter who's in. And so it's essentially a fake choice, right? Because you can choose who leads your country, but you cannot choose the fact that the currency is getting debased and there is a complete co-option of the society and economy itself. 35% of spending is just the government. What are they doing, right? They have to expand the balloon, spend money, inflate prices higher to make the debt they took out previously cheaper. Now, that is a total mess, too much for me to work out. But on the flip side, as an individual investor, you don't want to be in this mess. You want to be in assets. Which asset best defends against this? It is Bitcoin, in my opinion, but there are others, right? Tech investments, NASDAQ, S&P, stocks. It's all going to work because the currency has to be debased. There is an insane deficit. It won't be paid off. And ironically, they actually need to inflate prices because if prices don't inflate, it becomes even more insolvent because that debt actually gets more expensive if you have disinflation in the economy. So it's like this catch-22 where the government actually has to stimulate to make sure that GDP is positive, to raise the price level, to raise inflation, to make debt cheaper, and they're taking out more debt in order to do that. It's an insane thing, and I don't want anything to do with this, which is why Bitcoin for me. But of course, there are other assets that can benefit and obviously price in the debasement of currency as well. I just think Bitcoin is the fastest horse. Why is Bitcoin the fastest horse in the race though? Why exactly Bitcoin? It's because it has more fundamental growth than most other stuff. So stocks are great and they price in this debasement and the stimulus, but a lot of stocks just simply don't have a lot of fundamental growth. And so that the real returns that you're getting once you minus out all of this fake GDP and fake stimulus is basically nothing. You look at Bitcoin, it's got a 50% growth rate right now, if you invest over the long term. So it has more fundamental growth, and that's why the NASDAQ outperforms, because those companies have more fundamental growth, plus pricing in all of this stimulus. So Bitcoin does that, and being a monetary asset, it's going to price in the stimulus, plus the network adoption. And in 20 years' time, it won't have any network adoption because it'll be mature, and we'll have to invest in something else. However, the government cannot draw down, and it cannot cut costs. If you cut costs like this, you can see if you just cut these out to try and balance the budget, here's what will happen. 1.5 trillion in cuts is around 5.4% of GDP. GDP would fall 5.4%, and that means a global crash. All right, that's how we're told a recession comes about. GDP fell 3% in the global financial crisis, so 5.4 right now would trigger a huge crash. We can't have the crash. If they draw down and if they stop spending, they trigger a massive financial crash. Not a recession actually, but a massive financial crash where all financial assets start to drop in price, all the leverage goes bust. There we have it, global financial crisis 2.0. They cannot draw it down, they have to keep stimulating. But if you look at companies which are very mature, like Kroger here, which I think is a food manufacturer or distributor, their profit margins are not growing. Their profit margins are 1.43%, and they've been pretty much like that since the 1990s. They're not growing their margins, but they are growing their revenues because they're pricing in all of the currency debasement over time. So if you invest in these very mature companies, they haven't any real growth in them, a tiny bit. Yes, they're raising their revenues because GDP is going up, because the price level is going up, and that's because of stimulus. If you look at Kroger here, revenue 23%, total expenses 23%. They are raising their prices in line with the costs going up because fiat currency is being debased, the same amount of demand, the same amount of food and wheat, but more currency units entering, and so prices go up. If you look at the money supply here, which is M2 money supply is up 38%, but their revenue and expenses up 23%. They're actually getting efficiencies and trying to reduce costs, which is keeping inflation down, and the government's in here stimulating everything, forcing prices up. But like I said, we need them to do that, otherwise we get a huge crash in the economy. So they'll keep doing it, but we don't want to be part of that currency debasement. Out into Bitcoin, we can price it in, we don't have to worry over the long term. If you do trade crypto, check the Bybit deposit bonus down in the description for a deposit bonus if you are a new user. I'm James, this is ManagerG. Cheers for watching, and I'll see you in the next one.